Hello everyone, welcome to my channel. My name is Oshi and I'm not a financial advisor. In this video, we're going to be taking the part 4 of the investment opportunities series we began about 3 weeks ago. And in today's session, we're going to be taking a look at a very interesting investment instrument, and that is mutual funds. Now, the first question you want to ask yourself is, what are mutual funds? Typically, mutual fund is like a bowl of investment soup. Thousands or even millions of investors pull their money together to buy a variety of investment instruments, primarily stocks, bonds, treasury bills, and money market instruments. Now, the proceeds of these instruments are then shared across all of the investors, people with common intent or common investment goals, pulling resources together. And I typically like to view mutual funds as an important option when saving for retirement. They are low risk investment instruments and also offer very low returns. Mutual funds are controlled by asset management companies. These companies collect funds from a group of investors and invest them in various instruments. The next question you might want to ask yourself is, who are asset management companies? Asset management companies are companies who have gained experience over the years investing in diverse assets. They make decisions on what to invest in to maximize your yield or to maximize the yield of their customers. They typically understand the financial market more than you and I. The thing is, these companies are also extremely regulated by SEC in Nigeria, and so your funds are safe, guaranteed. Examples of asset management companies that we have is the ARM Investment, we have FBN Quest, and of course Stanbic IBTC. Personally, I am a fan of ARM Investment and I've been using them now for about 7 years. For me, I think they've been the best so far. I started off with ARM Investment and Stanbic IBTC. I ended up liquidating my assets in Stanbic IBTC and I retained only ARM Investment. Let's look at the ARM Investment structures, and they provide various funds. They provide the ARM Aggressive Growth Fund, the ARM Discovery Balanced Fund, the ARM Ethical Fund, ARM Eurobond Fund, the ARM Fixed Income Fund, and of course the ARM Money Market Fund. This is my best fund. I like to say that the mutual funds comes in various delicacies, and all of these names are nothing but nomenclatures. They vary from asset management companies to another. Briefly, I'm going to be going through some of all of these investment structures offered by ARM. The first one, which is ARM Aggressive Growth Fund, invests primarily in equities and as such seek to provide superior long-term protection against inflation to investors. This is meant for high-risk appetite individuals. The high risk of equity is lowered also by investing in fixed income securities. That is what they do, which provides a fairly predictable income stream and easy access to your money. The second one I want to talk about here is the ARM Discovery Balanced Fund. This is suitable for investors who want high capital growth over a long term to meet various objectives. You might say you want to buy a car, you want to build a house, you want to save for your child's education and things like that. You also have the ARM Ethical Fund. This is an open-ended mutual fund for Islamic investors, people that do not want to invest in companies that have to do with tobacco, alcohol, and all of that. Your fund is strictly invested according to the principles of Islamic finance and ethical values. The best of them all is the ARM Money Market Fund. ARM Money Market Fund offers higher interest rates than your savings account. Now, the best of them all for me is the ARM Money Market Fund. This offers higher interest rate than your typical savings account, which currently offers you 1.3% on your funds. It doesn't have to be long term. That's the money market account, money market fund. It doesn't have to be long term. The ARM Money Market Fund allows you quick access to your money. Currently, the interest rate is about 4% per annum, and you should also understand that this interest rate is paid daily, a daily compounding interest rate. The 4% per annum is actually not above the current inflation rate. As at this time last year, the ARM money market fund was doing about 13 to 14% per annum. As at that time, it was higher than the inflation rate. But as of now, this is currently lower than the inflation rate. We're going to be taking a look at the ARM investment client portal. Really lovely. I love this. You can actually go as far as redeeming your funds or making a redemption online. It is lovely, and you get your money, your funds deposited into your account in 24 to 48 hours. These guys are incredible, and I would always recommend these guys to anybody. You can see the dashboard here. This is what you see when you log into your investment account with ARM. And we also see here, you see a fund performance. Currently, as of 1st of October, the interest rate was about 4.08%. And as at last year, 4th of October, it was about 12% thereabout. So the interest rate of the money market account has slowly declined as a result of the interest rate from treasury bills, bonds also declining. That has led to the drop in the interest rate in the money market fund. We also see here transaction history. It shows you a detailed transaction history of every subscription that you've ever made and redemption, if any. You can see here, as you make subscriptions, you see that reflect in your transactional statements. And I think that is incredible. What are the advantages of investing in mutual funds? The first thing is diversification. Mutual funds spread their holdings across various investment vehicles, reducing the effect of any single security or class of securities as on the overall portfolio. Mutual funds contain hundreds or thousands of securities. Investors are less affected if one security underperforms. Just imagine you have a stock portfolio of about 100 stocks or 100 companies, and then one of the companies just goes bankrupt. You will not feel that effect as compared to if you just had 5 stocks or 5 companies. So basically, the mutual funds are well diversified, and that makes your funds a lot safe. The second thing is it's professional management. Mutual funds accounts are managed by qualified professionals, people of CFA level, ACCA level, deep thinking rooted individuals. These professionals invest only after careful analysis of the performance and prospects of different securities. It is a continuous process that takes time, and they specialize majorly in ensuring that they add value to your investment. The third point is regulations. Mutual funds are required to be registered with the Securities and Exchange Commissions, that's SEC. They are obliged to follow strict regulations designed to protect investors. For example, there is a limit to how much they can invest in certain securities, in certain investment instruments. There's a limit to how much they can invest in treasury bills, in bonds, in equities, and things like that. So you are safe basically, because they need to follow all of these guidelines. And the fourth thing is affordability. As a small investor, you may find that it is not possible to buy shares of large corporations. Obviously, with mutual funds, small investors can get started because of minimal investment required. You could start a mutual fund account with as little as 5,000 naira. And of recent, some investment companies actually take as little as 1,000 naira. You could start small and build up your portfolio, your mutual funds portfolio, up and up and up that way. The fifth thing is liquidity. Now, it's easy for you to redeem all or part of your investment anytime you wish, and you receive the current value of the shares. The process is swift and efficient. Like I said, with ARM investments, you can always do a redemption online from the client portal. It's that easy, and you get credited in 24 to 48 hours. Awesome, guys. And the final thing is there is a high level of transparency. As a unit holder, you are provided with regular updates, for example, bid and offer prices, interest rates, as well as information on your fund manager strategy. All of these companies have different strategies they employ. If you're the kind of person that you want to have low risk, low returns without necessarily keeping your money sitting in a savings account and yielding next to nothing, then the money market or the mutual funds are for you. Thank you very much for watching this video. Please smash that like button, share this video, subscribe to this channel so you don't miss any of my new videos, and turn on the notification bell.